Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik and welcome to my Dow Analysis series. In this video, we'll be analyzing the 11th largest company in the Dow by market cap, which is Coca-Cola, ticker symbol KO. And Coke stock is one of the first dividend stocks that I bought in my investment portfolio around 2.5 years ago. So I'm really excited to share this analysis with everyone. As most of us probably know, Coca-Cola is a beverage company that markets, manufactures, and sells beverage concentrates and syrups as well as finished beverages. So they have two basic business segments. So the first segment is concentrate operations, and within this segment they sell concentrates and syrups to bottling partners who then take that concentrate and prepare it, package, sell, and distribute the finished beverages. Coke also has their own bottling operations for some of their products, and that's their other business segment. And this graphic here showcases how that works. So as you can see, Coke produces these concentrates and syrups, and then they send that to the bottling partners who package and distribute the drinks. And then on the right side here, Coke also produces finished products themselves that they distribute and sell on their own. And throughout the world, they have about 225 bottling partners that operate 900 plants, which is a pretty impressive number in my opinion. And they also operate Costa Limited, which is a coffee store that has more than 4,000 coffee shops and 13,000 self-serve coffee bars throughout the world. So I think that's also a pretty cool opportunity, getting a little bit into, I guess the coffee beverages area, which is pretty cool to see as well. And if we take a look at the second quarter results for Coke, these were announced at the end of July, and they actually grew revenues by 12% to $11.3 billion for the quarter, and GAAP EPS unfortunately declined 28% year over year to 44 cents. But when we look at non-GAAP EPS, this grew 4% to 70 cents, and that actually beat analyst estimates of 68 cents per share. And another thing that they pointed out is that currency fluctuations actually negatively impacted earnings per share by about 9% for this quarter. But despite that, they were still able to grow earnings by 4% year over year, which is, I think, a really positive sign to see. For free cash flow, they had free cash flow for the first 6 months of the year of about $4.1 billion, which is a decline of $1 billion from the first half of 2021. Coke also updated their guidance for the full year of 2022. So in terms of revenue, they are expecting revenue growth of 12 to 13% year over year and non-GAAP comparable EPS growth of 5 to 6% year over year. And then in terms of their free cash flow, they didn't change their guidance at all, but their guidance for free cash flow is $10.5 billion for the year, which is a little bit lower than they generated last year, but still in line with analyst expectations. One thing that stuck out to me on the earnings conference call is they talked about their strong brand. So I think someone asked a question about, inflation, recession, how that is affecting basically consumers' decisions when purchasing Coke products. And essentially what they responded with is that Coke has an extremely strong brand, and their products are generally, fairly cheap in comparison to some other expenses. So what they were saying is that customers or consumers will look to larger expenses first when they're feeling the effects of inflation. Like maybe they will think about delaying the purchase of a new car so that they can save some money right now, rather than worrying about their few dollars they're spending a day on Coke products. And even if they do start worrying about those smaller purchases, Coke still has the brand recognition and brand loyalty to attract customers, even if it is a little bit more difficult for those customers to pay for it. So I think that's a really good point, and really shows that Coke is positioned well for an inflationary environment in a recession where consumers really have to choose wisely where to spend their money. So I think, the earnings were pretty good considering all the macroeconomic issues. And I think, like I said, Coke is definitely well positioned to navigate any uncertainty we see in the next few years. Now we will take a look at the balance sheet, which I'll show up on the screen here. And we can initially see that cash is down about $700 million since the end of 2021. But current assets are actually up about $600 million in that same time span to $23.1 billion. And we can look at current liabilities. They increased a similar amount, and this gives us a current ratio that is above 1. So basically, they have more current assets than current liabilities, which means they have, the capital on hand in the short term to pay off all of their short-term liabilities. Unfortunately, total assets are down a little bit over $1 billion in the last 6 months, but total liabilities are also down a similar amount. So generally, you don't really want to see assets decreasing, but over a short time span, like 6 months, it's really not that big of a deal. And we can look at debt as well. We can see they have about $37 billion of long-term debt and about $800 million of debt that is due within the next year. So this gives them a total debt of $37.5 billion. When we compare this to their equity of $24.8 billion, this gives them a debt to equity ratio of 1.51, which is pretty healthy, I think, at this point for Coke. I also like looking at net debt, which gives us an idea of how their debt has truly changed from one period to the next. So right now, net debt is around $28.6 billion, which is down a little bit more than $1 billion since the end of 2021, which is pretty awesome to see in my opinion. So overall, I think the balance sheet is pretty healthy. I'd like to see a better history of growing assets and shareholder equity, but that's really not the biggest deal if they are able to, continue reducing the debt over time. So when we take a look at the dividend, Coke yields a bit under 3% with a payout ratio of around 70%. And I'm actually really happy to see that payout ratio because just a few quarters ago, I do remember the payout ratio was in the higher 80% range, and that was actually getting a little bit concerning. So it's really awesome to see that they have brought that down and a little bit more under control. Over the past few years, we can see that Coke has been growing the dividend by about 3.5% on average per year, which is really not that good in my opinion. And for a lot of my stocks in my portfolio, I like to see higher dividend growth. But when we look at the overall business, the business isn't really growing quickly enough to allow for more dividend increases. And when looking at consecutive years of dividend increases, this table is actually wrong. They do have 61 years that they have been consecutively increasing their dividend, and actually that makes them a dividend king, which is really awesome to see. The best thing really about Coke's dividend is the consistency and strength of their dividend at this point. Unfortunately, they haven't really been able to grow it that much the last few years, and I don't really expect them to grow it all that much in the future, but I definitely do expect them to grow it a little bit. And for me, that's good enough for Coke. Now we are going to move into some valuation metrics that will help give us an idea of whether Coke is undervalued or overvalued right now in terms of their stock price. So the first thing we're going to look at is the PE ratio. And right now the PE is actually 36, which seems a bit high. And when we look here at their long-term average, it's around 25. So that definitely does indicate that they are a bit overvalued. And when we look at earnings per share as well, there's definitely been a little bit of growth. But it's certainly not very steady. It's been fluctuating a little bit. When we look at their peers, Coke is in the consumer defensive sector, and right now that has an average PE ratio of 24. And within the non-alcoholic beverages industry, that industry has an average PE of 32. So in both instances, Coke looks a bit overvalued compared to their peers as well, which is definitely not the best thing for us who might be looking to add Coke shares to our portfolio now. I also like using a discounted cash flow model to calculate a fair value for stocks, and for Coke I calculated a fair value of $44.43, and this gives us a buy price of $39.99 with that 10% margin of safety that I like to include. This is definitely below the current stock price, which is right around $65 at this point. So that definitely again points to Coke being a bit overvalued right now. And when we look at a 3-year chart of Coke stock, we can see they reached a pre-pandemic high right around $60 back in early 2020, and they really didn't recover to that level until the beginning of 2022, which most stocks and the overall market really recovered past pre-pandemic highs much before the beginning of 2022. Since then the stock has definitely slowed down some, but it's still up 9% year to date, which is pretty impressive when we compare it to the S&P 500, which is down 11% year to date. We can also look at the 1-year chart. They do have a lot of volume in the $60 range, which seems to be a key price there, and the 200-day moving average is also sitting around $60. So I think that definitely looks like a good entry point from a technical perspective. It keeps popping up as being kind of support right now, and in the more long term, that's kind of where they hit at their peak before the pandemic as well. Coca-Cola has an extremely strong brand and product line that has stood the test of time, but unfortunately, growth in the business really just has slowed down in recent years. There's definitely still a great company that pays a great dividend. They just haven't been able to grow the dividend as much as I would like to see. Because of that slower growth, I do think the stock price right now of near $65 is a little bit too high, and I think a price of around $55 or $50 is a lot more attractive. I do own Coke. Coke in my dividend portfolio, like I mentioned before, and right now my average cost is $52.41. And right now I'm really not planning on adding any more at these prices. I really do like the company, but for me, I'm looking for a little bit more dividend growth. I do like the consistent, steady dividend, but for a company to be a larger portion of my portfolio, I do want it to be able to grow the dividend more. But if you're just looking for a solid, stable dividend, then Coke is really a great company to own at any price, in my opinion. So let me know what you guys think is the fair price for Coke stock down in the comments below. I really enjoy hearing your feedback there, and I want to thank everyone for sticking around to the end of the video. I really do appreciate that, and I will see you all in the next one.